Can start.
Speaker of the session, Veenaa Venkatesh Madam Garu, and members who joined virtually today's webinar. A pleasant good evening to each one of you, and welcome to the CPE program on benefits or perquisites and income tax and GST implications by CA Veenaa Venkatesh Garu. Employee benefits or perquisites may be paid vacation, meal breaks, social security, and payments, perks, bonus, the employee allowances, achievement awards, health insurance, and so on and so forth. What will be the implications with respect to the income tax and GST will be dealt by our CA Veenaa Venkatesh Madam Garu. It's my privilege to introduce today's speaker, CA Veenaa Venkatesh Garu. Veenaa is a chartered accountant currently practicing in Chennai. In her previous role, she was a senior associate at Lakshmi Kumaran and Sridharan attorneys in Chennai. At LKA, she was a part of the indirect tax team handling consulting and litigation matters on different issues concerning the goods, GST, service tax, and Central Excise Act. During her stint in LKS, Veenaa was involved in drafting legal opinions, representations to the Central Board of Indirect Taxes and Customs, responses to show cause notices, appeals against orders passed by the adjudicating authorities. She handled assignments in tax compliance, review of clients in food industry, manufacturing and insurance sector, as well as anti-profiteering review of public sector undertakings, and she is assistance in filing refund applications also. She has represented various clients before the departmental authorities in litigation disputes. She has actively participated in various seminars conducted by the ICAI, PCAs, and other associations, and assisted in preparation of content and slides for the sessions. She has also authored articles on critical issues in GST, which has been published in online forums. Veenaa articled under Sri M. Balasubramanian in Sundaram and Srinivasan Chartered Accountants, Chennai. She is a graduate from Idras College for Women, Chennai, with a bachelor's degree in commerce. With this brief introduction, now I present the speaker of the today's session, CA Veenaa Madam Garu, to the august audience. Madam, request you to start our session, madam. Thank you.
Thank you, sir. Thank you for the warm introduction.
Yes, ma'am. Thank you.
Yes, sir. So I would start with the session. At the outset, I would like to thank SIRC for having given me this opportunity to present before the audience today. So I'll just share my screen, sir. Just.
Always, ma'am. Thank you.
So the topic which I've chosen for today is benefits and perquisites and the implications under the Income Tax Act and the GST, that is Goods and Service Tax Act. So here I would like to stress that I would be concentrating more so on benefits or perquisites in the hands of the assessee under the head profits and gains from business or profession. So this would be the agenda for the session. Okay. So firstly, I'll just touch upon the meaning of the term benefit and perquisite, and then I'll take you through the treatment under the Income Tax Act. That is, I would be highlighting the recent introduction of Section 194R, the provisions contained under the section, and I'll also take you through the clarifications issued by the board under 2 circulars. And then I would briefly touch upon the relevant provisions under GST. And finally, we can see a few case studies on the implications under income tax and GST for benefits or perquisites which are given. So to start off with, both the terms benefits or perquisites mean more or less the same. Generally understood, benefit or perquisite is something of advantage or of value, or say a reward or a gift which is given. For the purpose of income tax, at least for the purpose of Section 28, that is charging income under the heads profits and gains from business or profession, these terms have not been specifically defined. So that is the reason I have actually referred to dictionary meanings here, as you can see. However, generally understood under Income Tax Act, perquisite is usually associated with those incentives or rewards, like Sir said, which are given by an employer to an employee. Of course, the taxability is separately taken care of under the chapters or sections relating to income taxable under the head salaries. In this particular session, we will be concentrating more on benefits or perquisites, which are received by a resident assessee and which are chargeable to tax under the head profits and gains from business or profession. So to state a few examples of benefits of perquisites, sales discount, or say rebate, or rent-free accommodation. In this case, we could say rent-free accommodation given to a director in a company who is not an employee, or waiver of loan by borrower. All these are examples of a benefit or perquisite which is given by one person to another. So under the Income Tax Act, if you see, Section 2, Clause 24, which defined the term income, it included the value of any benefit or perquisite which is taxable under Clause 4 of Section 28. So let us go to Section 28 and see what Clause 4 of Section 28 specifies. So under Clause 4, the value of any benefit or perquisite, whether convertible into money or not, which arises from business or by the exercise of a profession, was chargeable to income tax under the heading profits and gains of business or profession. So what is to be noted from this is that any person who receives any benefit or perquisite, it may be convertible into money or not, but such benefit or perquisite should be received by him during the course of conducting his business or during exercising exercising his profession. So if he receives any benefit or perquisite while carrying on business or while exercising the profession, he ought to disclose this as income under the head profits and gains of business or profession, and this will be chargeable to income tax. So here I would like to stress on this particular term, that's why I have highlighted also, whether convertible into money or not. So why this is relevant is, generally benefit or perquisite, if you see, we tend to assume or understand that it could only be in kind. But whether something which is completely in cash, will that also qualify as benefit, is a question in itself. So here I would like to refer to one decision of the Supreme Court in the case of Mahindra and Mahindra. So here the facts of the case are as follows. So Mahindra, as you know, is a dealer of motor vehicles. So here Mahindra had actually borrowed a loan from a company in USA, and this loan was towards purchase of tools or equipments or machinery, basically capital assets. So this American company granted loan to Mahindra. Subsequently, there was a takeover of this American company by another American company, let's say AMC. So at the time of takeover of the borrower by the American company decided to waive off that principal amount of loan which was outstanding. So the question before the court here was whether this portion of the loan principal amount which was waived off, will it qualify as income under the sections 28, more specifically clause 4. So here the income tax officer was of the opinion that this would qualify as income under the clause 4 of section 28. However, on challenge, the commissioner also held the same as the income tax officer. The assessee subsequently challenged in the tribunal and got a favorable order saying this will not qualify as income under section 28. Subsequently, it went to the High Court, which upheld the order passed by the tribunal. And before the Supreme Court, the question was whether this particular waiver of principal amount of loan, specifically being a cash receipt, would it qualify as income under section 28? Also, another question was whether, if not section 28, could it be charged to income under section 41? So I would like to just quote from the judgment itself here. So this is what was noted in the judgment. On a plain reading of section 28 clause 4 of the IT Act, prima facie it appears that for the applicability of the said provision, the income which can be taxed shall arise from the business or profession. Also, in order to invoke the provision of section 28 clause 4 of the Act, the benefit which is received has to be in some other form rather than in the shape of money. I repeat, the benefit which is received has to be in some other form rather than in the shape of money. In the present case, it is a matter of record that the amount of so-and-so is received as cash receipt due to waiver of loan. Therefore, the very first condition under section 28 clause 4 of the Income Tax Act, which specifies that any benefit or perquisite arising from the business shall be in the form of benefit or perquisite other than in the shape of money, is not satisfied. So because of this particular reason, it was held that this amount cannot be taxable under section 28 clause 4. Subsequently, on the second question of whether this amount would qualify as income under section 41 also, it was noted by the Supreme Court that in order to qualify as income under Section 41, there has to be a cessation of a trading liability. Because the loan here was with respect to capital assets, like I said, purchase of tools, dies, equipment, etc., there was no cessation of trading liability as such. So the question of taxing this as income under Section 41 also did not arise. So here, with this judgment, what I wanted to just highlight was there is a view or there is a Supreme Court judgment which says that if the benefit of perquisite is wholly in cash, say for example this waiver of the loan amount, then that would not qualify as income under Section 28, and that cannot be subject to income tax under the heads profits or gains under business or profession. For a moment, let's just park this aside. Whether this is right or wrong, we will see. Moving on. So why the necessity to bring in this Section 194R? So earlier also, any income from benefit, any income which was benefit or given as a benefit or perquisite to any person carrying on business was still taxable. However, the responsibility was on the recipient to disclose this as income and subject it to tax. Because like we know, most of benefits or perquisites tend to be in kind, or valuation may be difficult. So all these were going unnoticed. So in order to plug the loophole, it was thought fit to insert a section whereby the responsibility was cast on the person who was providing the benefit to deduct tax at source, by way of which automatically this would be treated as income by the recipient. And the intention behind introducing this section prima facie seems to be to plug this loophole. So this Section 194R, which we are going to discuss about today, broadly deals with deduction of tax on benefits or perquisite in respect of business or profession. One thing which I wanted to highlight here is, if you see, 194R specifically does not make reference to Section 28 as such, but it uses more or less the same words which are used in Section 28. And the idea seems to be that the value of a benefit or perquisite which is provided to a resident who is carrying on business or profession ought to be taxed. And here the liability is placed on the person who is providing the benefit to deduct tax at the rate of 10%. So if you see the applicability of the provision, basically it is applicable on all benefits or perquisites which are received by a resident. And the resident should be carrying on business or profession. Again, here also the stress is on benefit or perquisite may be convertible into money or not. And more so, this provision specifically states that the person providing the benefit or perquisite has to ensure that tax has been deducted on the value or aggregate value of such benefit or perquisite. Moving on, if you see, there is a proviso under Section 194R. So what this proviso exactly states is, where the benefit or perquisite is wholly in kind or partly in cash and partly in kind. So such part in cash is if it is not sufficient to meet the liability of deduction. So say the liability to deduct is 10% of tax. So what that value of benefit which is in cash, if it is not equivalent to this 10% or if it is not exceeding 10%, then this particular proviso says the person responsible for providing such benefit or perquisite shall, before releasing the benefit or perquisite, ensure that tax required to be deducted has been paid. So here I would like to make reference to a similar proviso which is under Section 194B. So as you all know, Section 194B deals with TDS in case of winnings from lottery or crossword puzzles, etc. So under Section 194B, there is a similar provision which says, in case that is winnings or from lottery or crossword puzzle is wholly in kind, there again the responsibility or the liability on the part of the deductor or the person who is providing the benefit or say the winnings or the amount is that he has to ensure that the tax which is otherwise liable to be deducted has been paid by the recipient. So here again, I would like to again refer to another decision of the Karnataka High Court in the case of Hindustan Lever. So facts in this case was that Hindustan Lever was engaged in manufacture and trading, sale of consumer goods. So here during the assessment years 2001-2 and 2002-3, there was a scheme which was announced. So with every sale of a product, a good, there were coupons which were given. And certain coupons carried prices along with them. So in case you got a coupon and it had a price reward, say a car or a gold coin or a silver coin, all these were given along with purchase of the consumer good. So the value of these prices which were given amounted to roughly around 60 lakhs. So Hindustan Lever had given these prices to its dealers. So here, during the course of assessment, the department noticed, the department's view was that Hindustan Lever ought to have deducted tax under section 194B on these prices which were given off to customers through these coupons. So here again, the department during the course of assessment actually initiated proceedings under section 201, treating the Hindustan Lever to be an assessee in default because they failed to deduct tax under section 194B. So here the question again before the Karnataka High Court was whether the department was right in initiating proceedings under 201, especially in a scenario where the winnings were completely in kind and the Hindustan Lever failed to deduct tax on such winnings. So here again, I would like to quote from the judgment. So what was held by the court here was that Hindustan Lever was not liable to deduct tax as such. They were only liable to ensure that tax was paid. So going by the wordings used in section 194B as also section 201, it was actually held in favor of the assessee, that is Hindustan Lever, to say that proceedings under 201 could not be initiated. However, it was highlighted that penal provisions under 271C and 276B may apply. So I would just quote one particular passage from the judgment. So this is what it reads. If the winnings is wholly in kind, as a matter of fact, there cannot be any deduction of tax at source. The word or term deduction employed in the provision postulates a reduction or subtraction of an amount from a gross sum to be paid and payment of the net amount thereafter. So where the winnings is wholly in kind, subtraction or reduction of any sum therefrom does not arise. The legislature therefore had cast duty or responsibility on such person to ensure that the tax is paid before the winnings is released. Thus, it is mandatory for the person who is responsible for paying income by way of winnings wholly in kind to ensure that tax has been paid in respect of the winnings before it is released to the winner. So what is stressed here, or the point to be noted is, so long as the term deducted is used, they say there is no question of deduction by Hindustan Lever. All the responsibility or liability on them is only to ensure that tax is paid by the recipient. So that being the case, since the term used in section 201 also, when you see, is where he fails to deduct tax. So whether that could be, proceedings could be initiated was the question, for which the Karnataka High Court held in favor of Hindustan Lever, saying there was no liability for them to deduct tax and hence the proceedings initiated was quashed. So why I wanted to highlight here is whether we can apply the same logic here under 194R. And can we say, because here again, the responsibility is only to ensure that tax is paid, applying the same logic, can we say, in case there is failure on the part of the deductor to deduct tax under section 194R, where the benefit or perquisite is wholly in kind, can we take the same argument and say recovery proceedings cannot be initiated by the department? Again, let's park this question here for a moment. We will look into it subsequently when we discuss other clarifications. Moving on, there are certain exceptions to section 194R. So section 194R, while it says that the deductor has to deduct tax on the value of benefit or perquisite which is given to a resident who is carrying on business or profession, there is also a relaxation or a leeway given. It says where the value or aggregate of value of the benefit or perquisite provided or likely to be provided during the financial year does not exceed 20,000, then there will not be requirement to deduct tax. So again, we have to look into the value of the benefit or perquisite and not just that particular benefit or perquisite. If there are, say, multiple benefits or perquisite given by that person to the recipient during the course of the year, so long as the aggregate of value does not exceed 20,000, the liability to deduct tax under 194R will not kick in. Similarly, in case the total sales, gross receipts or turnover of the provider, who is an individual or a HUF, if that does not exceed 1 crore in case of business or 50 lakhs in case of profession during the financial year immediately preceding the financial year in which the benefit of perquisite is provided, even in such a scenario, there will not be any requirement to deduct tax under section 194R. So this is a classic case where tax audit is not applicable. There will not be any requirement to deduct tax. So broadly, this is what 194R is all about. So to summarize, it casts the liability on the deductor, or rather the provider to deduct tax, that is, who is providing benefit or perquisite to a resident, on the value or aggregate value of such benefit or perquisite. It can whether or not, again, convertible into money. And it, of course, with the threshold of 20,000, we have to see. And the deductor has to, in case, as per the proviso, the benefit is totally in kind. Then there is, an additional responsibility, or maybe we could say a relaxation, where the provider just has to ensure that the tax which is otherwise liable to be deducted is paid by the resident. So there are 2 circulars which have been issued by the board under section 194R. So there are a number of clarifications which are given. I've just taken the important or relevant clarifications here. So the first clarification, which is important or which we would discuss today, is the circular clarifies that the deductor, that is the provider of benefit, is not required to check whether the amount of benefit or perquisite is taxable under section 28 in the hands of the recipient. So what this means is, so long as you receive a benefit or perquisite and it is during the course of business or profession, the liability to deduct tax automatically kicks in under section 194R. Whether the benefit of perquisite will qualify as income under section 28 is not relevant. So this is what the circular seems to suggest. Whether this is right or wrong is a question in itself. While giving this clarification, the circular has actually referred to this particular decision of the Calcutta High Court in Pilcom versus Commissioner of Income Tax, West Bengal. So briefly taking you through the facts of this case. So here Pilcom was actually a committee of formed by the hosting countries of World Cup way back in 1996, that is India, Sri Lanka and Pakistan. So Pilcom had a bank account based in London through which it had actually transferred an amount to ICC, International Cricket Council. So here again the question was whether tax ought to be deducted under section 194E on this amount which was transferred by Pilcom to ICC. So here the assessee was of the view that because this amount which was transferred was otherwise not an income chargeable to tax under the Income Tax Act, the question of deducting tax under section 194E would not arise. However, the High Court held in favor of the department here. And while noting so, it was noted that so long as the amount which was transferred to ICC qualified as income under section 115 BBA. So 115 BBA, if you see, that would say any income which is earned by a non-resident sports association for games played in India would qualify as income, and 194E again would refer to an income or a payment under section 115 BBA, and it would say that so long as it qualifies as a payment to a non-resident sports association, tax is liable to be deducted. So here the court said those are the only 2 conditions which are relevant. So if that is satisfied, automatically the question of deducting tax will arise, and whether at all this is an income or not based on the DTA provisions, that is a different question in itself. And if it so happens that this is not an income, then there is always an option for the assessee to claim refund along with interest. So this was what was held in Pilcom, and relying on this, the circular has clarified saying, in the case of 194R also, there will not be any requirement to check whether the amount which is qualifying as a benefit or perquisite is actually taxable under section 28. So here I would just like to point out that while the intention seems to be that otherwise the income which is going unnoticed or which escapes tax is sought to be covered under section 194R, can there be a situation where if the benefit is not at all an income, Why at all the question of deducting tax under 194R? So that again is a point which requires a detailed deliberation. Moving on, the second clarification. The circular says it is not necessary that the benefit of perquisite has to be only in kind. So this is what has been clarified in the proviso which we saw, wherein it says that where the benefit is wholly in kind or partly in cash and partly in kind. So basing this, the circular has clarified that benefit of perquisite may be in cash also. So here again, if you see, they have relied on this judgment of Madras High Court in the case of Ramaniyam Homes Private Limited. Again, in Ramaniyam Homes, the question was whether the settlement of loan or waiver of loan amount, whether that would qualify as benefit of perquisite, thereby income under Section 28. So in Ramaniyam Homes, the Madras High Court had actually held in favor of the department, saying that it would qualify as income under Section 28. That is, so long as anything which is given of value, so it can be even a monetary item, so long as a value is attributable to it, it will qualify as benefit of perquisite, and automatically it would qualify as income under Section 28 Clause 4 was what held in Ramaniyam Homes by the Madras High Court. Basing reliance on this judgment, the circular has clarified that it is not necessary that benefit of perquisite has to be only in kind. So here I would like to just highlight that this Mahindra and Mahindra Supreme Court decision was subsequent to Ramaniyam Homes. So this has been, rather this has not been taken into account while clarifying. So whether we can challenge this particular clarification because the Supreme Court has held that where the benefit is totally in cash, say cash receipt like waiver of loan, it will not qualify as benefit of perquisite for the purpose of Section 28. So again, that is a question. One thing which I wanted to highlight here was that predominantly, if you see, the circulars generally are delegated legislations which are issued for the purpose of clarification. But this particular circular, which is clarifying, has been issued under Section 194, subsection 2, which specifically states that these guidelines have to be presented before the House of the both the houses of the Parliament. So with the acceptance of both the houses of the Parliament only, this particular circular has been issued. So still can be challenged is again a question in itself, which only time will tell whether the decision in Mahindra and Mahindra can be applied and can we take a stand to say that where the benefit of perquisite is fully in kind, the question of qualifying it as, where the benefit of perquisite is fully in cash, it will not qualify as benefit for the purpose of Section 28, and consequently the necessity to deduct tax under 194 would not apply. Whether that position can be taken is again a question which we have to see. Thirdly, another clarification which has been given is one-time loan settlement or waiver of loan granted on reaching settlement with borrowers would not be subject to TDS. Of course, if you see this particular clarification, here they only seem to suggest that in order to remove difficulty or because already the borrower is taking a cut due to the waiver or settlement of loan, they do not want to additionally burden him with the responsibility of deducting tax, and hence it has been clarified that one-time loan settlement or waiver of loan reaching settlement with the borrowers will not be subject to TDS under Section 194R. One point here again is they have not gone into the question of whether because this is a cash receipt, will it qualify as benefit of perquisite? All that has not been thoroughly discussed in the circular. But however, we can be rest assured that in these cases, 194R will not apply. Here, I just wanted to highlight another example. Say, for example, let's take a scenario of bad debts written off. So in the case of bad debts, when the person is writing off the debt as bad in his books of accounts, it is only a unilateral act. There is no agreement with the person who has to pay the liability. So will that qualify as a benefit is a question. In my view, I would say that would not qualify as a benefit because unlike in the case of loan, where both the parties agree, and you know for a fact that there is the liability risk there or hence there is no question of paying it. In the case of bad debts write-off, there is always a question of the person paying the amount subsequently. subsequently, when the amount is paid, section 41 also clearly states that this will be treated as benefit in the hands of the person who has written it off. Now, the question arises, because this person has otherwise written off this debt as bad, and by virtue of section 41, because this is to be treated as benefit, now will the person, that is the debtor, should he deduct tax under 194R? Because 194R does not restrict itself to only section 28. It only says so long as any value, of any benefit or perquisite is given to a resident during the course of business, that would be taxable. If it is taxable under section 41, will there be a question of deduction by the person who is paying? Because according to him, he's only settling a liability. There is no question of benefit. It's only because of the fact that this person has written off the debt as bad, this question of benefit arises. So this is some point which needs deliberation, or this is again one issue which has come up because of this clarification. Moving on, the next clarification is fairly simple. So the circular only says, because these provisions were introduced with effect from 1st of July 2022, for the purpose of computing the threshold of 20,000, the value or the aggregate value of benefits or perquisite shall be computed from April, because it talks about financial year. So they say even those benefits or perquisites which were given in April, May, and June would still be includable to compute the threshold. However, TDS would only be applicable on benefits or perquisites which are provided after 1st of July 2022. The next clarification, which is again important, is they have said that sales discounts, cash discounts, or rebates which are allowed to customers would qualify as benefits or perquisite. However, to remove difficulty to sellers, because these are all on a day-to-day basis, you can see, manufacturers giving sales discount or cash discount to all dealers, rebates, and so on and so forth. So in order to curb the difficulty or remove difficulty, a relaxation has been given to the extent to state that no tax is required to be deducted under section 194R on such sales discount, cash discount, and rebate. So here the circular also clearly clarifies that this relaxation is only in case of sales discount, cash discount, or rebate, and you cannot extend this relaxation to other discounts or other benefits, say free samples which are given, or other incentives which are given in kind, or free ticket for an event, or say you sponsor a trip for the dealers, so on and so forth. So you can't extend this relaxation to those benefits or perquisites. So I would repeat again, sales discount, cash discount, or rebate would still qualify as benefit, but only for the purpose of removing difficulty to seller. A relaxation has been given that in such cases, the seller need not deduct tax under section 194R. So one point which I wanted to highlight here is, while there is no liability to deduct tax, it should be noted that the value of such benefits or perquisites, that is in relation to sales discount, cash discount, or rebate, would still be includable while computing the threshold of 20,000. So that should not be ignored. So long as the value, including all these, if the value aggregate exceeds 20,000, then the liability to deduct tax under 194R automatically kicks in. The next clarification is with respect to reimbursement of expense. So generally, if you see, in case of service provided, say like chartered accountants or any legal service which are provided, there may be a question of travel, boarding, lodging, etc., which would be incurred by the service provider. So whether if the service provider claims these expenses as reimbursement from the service recipient, would they qualify as benefit or perquisite? So what the circular has clarified is that it is important to see on who is liable to incur these expenditure. Say, suppose the liability to incur the expenditure is on the service provider himself. In such a case, if the service recipient still reimburses this amount, then definitely it would qualify as a benefit or perquisite. And the consequence is that TDS would be deductible under section 194R. However, if the invoice for such services are in the name of the recipient, and if the provider is only acting as an agent, then such reimbursement would not qualify as benefit. And as a consequence, there would not be any requirement to deduct tax under Section 194R. We would touch upon the concept of pure agent when we discuss GST. The next clarification is, in case of benefits or perquisites which are used by a person other than the recipient. So generally, when benefits or perquisites are given by, say, a manufacturer to dealer, and in turn the dealer gives it to his employees. So there could be a question of the employees directly enjoying the benefit given by the manufacturer. So in such cases, the clarification here is that the tax is required to be deducted by the person providing, that is the manufacturer, in the name of the recipient entity and not directly the employees. So let us take this example. So where free medicine samples are provided by a company to a doctor who is employed in a hospital. So here it is important to note that although the samples may actually be received by the doctor or the benefit is enjoyed by the doctor, still the recipient here is only the hospital in which the doctor is employed. So the tax deduction under Section 194R would have to be made only in the hands of the hospital. So the point to be noted here is that the value of 20,000 also, it has to be computed in the hands of the hospital and not the doctor. Since the doctor is an employee, the hospital may subsequently treat this benefit or perquisite as one given to its employees, and the implication under Section 17 and Section 192 will kick in. Now, question arises, what if this doctor is not an employee, rather the doctor is a consultant? So here again, if you see, the provider of benefit has to deduct TDS under Section 194R in the name of the hospital, and subsequently the hospital would be required to again deduct tax under 194R in the hands of the doctor. So to simplify, the circular has clarified that in such cases where the ultimate recipient is not an employee, or in a case where the benefit provided to the ultimate recipient is also covered under Section 194R, in those cases, the provider of benefit can directly deduct tax in the hands of the ultimate recipient. So here one point or one question which I wanted to highlight is that in these cases, can we take an argument to say that the limit of 20,000 has to be seen only in the hands of the ultimate recipient? So let's take an example, say the free samples are given to 5 doctors in a hospital and the total amount is 25,000. So if you treat it as a benefit given to the hospital and then subsequently hospital giving a benefit to the doctors, then the question of deduction under 194R will automatically come, because in the hands of the hospital, the value of benefit is 25,000. However, if the relaxation given by the circular is applied and directly the deduction is in the hands of the doctor, so since there are 5 doctors, the value of benefit in each doctor's hand would only be 5,000, which is less than 20,000. So in this case, can we say that because the value of benefit does not exceed 20,000, there is no question of deducting TDS or tax under 194R? This again is a question. The circular has not explicitly given any clarification for this particular question. So these were fairly or broadly the major clarifications which I wanted to touch upon from the 2 circulars which were issued under Section 194R. Moving on, the circular also touches upon the aspect of valuation, because like we know, benefit of perquisite generally is in kind. So again, the question of valuing the benefit of perquisite is very important. So what the circular says is generally the value would be based on fair market value. Of course, they have not gone into what exactly fair market value would be or how do you compute fair market value. However, the circular has also clarified that if the provider of benefit purchases the benefit or perquisite, the value shall be the purchase price. So say he is a trader, so he procures and gives it to another person who is into business, and if 194R to apply, then the value of the benefit would be the purchase price for this person. However, if he is a manufacturer, then the value will be the price charged to customers. So if not for this dealer, if he is again selling these goods to outsiders for a particular price, then the price charged in the hands of the outsiders would qualify as value of benefit or perquisite for the purpose of 194R. So having said this, then why at all the necessity to value a benefit or perquisite on fair market value may be a question. In my view, maybe if the benefit or perquisite is in the form of service, then maybe we have to adopt fair market value, because these exceptions only talk about goods where it is purchased or manufactured. And also one more clarification here is that the value of GST need not be included in value for the purpose of TDS under section 194R. So if GST were to apply, then we can exclude GST amount, and in the net value, TDS at 10% has to be deducted under section 194R. Now let us see the consequence of non-deduction in the hands of the deductor. Like I already discussed in the case of Hindustan Lever, can we adopt the same logic here? Because if you see, more or less the provisions are pari materia. The proviso is also similar to the one under section 194B. So as decided by the Karnataka High Court in the case of Hindustan Lever, it may be possible to take a stand or to take an argument that here again, since the responsibility, again I'm stressing on the fact that I am only talking about a case where the benefit or perquisite is wholly in kind. So if it is wholly in kind, we can still take an argument to say that there is no question of deduction in that sense. All he has to do is only ensure that the tax which is liable to be deducted is paid by the recipient, who is a resident. So that being the case, that logic can be extrapolated to say that recovery proceedings under section 201 cannot be initiated. However, as regards penalty under section 271C and also imprisonment under section 276B, it is noteworthy that if you see both these sections, these were amended through the Finance Act 2022 itself to include within its ambit the cases covered under the proviso to section 194B. Because otherwise, generally the penalty was only in case of failure to deduct tax. But if you see, it has been amended to include failure to even pay the amount under the proviso to section 194B. Similarly, for imprisonment also, a similar proviso or amendment has been made to the provision, bringing into its ambit the proviso under section 194B. While this was done only through Finance Act 2022, there is no such explicit inclusion of section 194R. So can we take a stand to say that penalty proceedings under section 271C will also not apply, applying the decision of the High Court in the case of Hindustan Lever case? That again has to be tested. In my view, it is possible, but of course, it is up to the courts to decide if that stand can be taken. So fairly, these are broadly the implications on benefit or perquisite under the Income Tax Act. So under GST, I just want to touch upon certain important provisions, and then we can go on to the case studies to see the practical implication on benefits or perquisites which are received or given to a resident. So under GST, as you all know, the taxability or levy is on supply of goods or services. So there is this concept of composite and mixed supply, which kicks in when there are two or more supplies. So when there are two or more taxable supplies of goods or services, and if those supplies are naturally bundled and they are supplied in conjunction with each other during the ordinary course of business, then it qualifies as a composite supply. And the taxability is that the principal supply, or rather the supply would be treated on par with that particular supply which acts as the principal supply. So let us take a common example. Say you are purchasing AC and you get the installation services also along with it. So in such a scenario, there are two supplies. One is supply of AC and one is supply of installation services. And these are naturally bundled and they are supplied in conjunction with each other during the ordinary course of business. So here, if you see, principal supply is nothing but the predominant element in the supply, which is naturally the supply of AC. So this would be treated as supply of AC only, applying the logic of composite supply, and rate applicable to AC would be payable. However, in a case where two or more individual supplies although they are made in conjunction with each other, that is more or less about the same time, if they are not naturally bundled, or rather if they do not qualify as composite supply, and if there is a single price which is charged for these two supplies. So here the point to be noted is the term single price, where composite supply does not refer to price. In the case of mixed supply, it specifically states that if those supplies are provided for a single price and they do not qualify as composite supply, then they are to be treated as mixed supply. So what happens when the supplies qualify as mixed supply? So the liability or the taxability is that supply which has the highest rate of tax would be adopted, or that would qualify as the predominant element, and so this supply will be liable to tax at the higher rate. So maybe for this you can take an example of say along with a washing machine or along with a refrigerator, hair dryer or an iron box is given which is at a higher rate. So although these two are not naturally bundled, since they are supplied in conjunction with each other, and if there is a single price for this supply, it qualifies as a mixed supply. And suppose let's assume the rate of tax for hair dryer is higher than the rate of tax for refrigerator, then the entire value will be subject to that higher rate of tax. So this is with respect to composite supply and mixed supply. I would also like to highlight the relevant provision under input tax credit under GST, which I would be discussing in the case studies to follow. So under GST, as you all know, the recipient can take credit of input tax charged in the invoice subject to the conditions which are specified under section 16. Additionally, section 17 restricts or blocks the credit in the hands of the recipient in certain specific scenarios. One such scenario which would be relevant for our topic or our discussion today is that in case of goods which are lost, stolen, destroyed, or which are disposed of as gifts or free samples, the section specifically states that ITC would not be eligible in hands of the recipient. So let us move on to the first case study here. So here, X is supplying washing machine to its dealer, and for every unit of washing machine which is supplied by X to its dealer, an iron box is given free of cost. And this is subject to the condition that the dealer in turn has to give this iron box while he is supplying the washing machine to its end customer at the time of sale. So in this scenario, would TDS under section 194 apply? Or let us say, can this iron box be treated as benefit? So the circular which I was referring to clarifies that so long as it is clear that the dealer is obligated to in turn give this iron box to the customer, there is no benefit or perquisite in the hands of the dealer. So the question of taxing it under section 28 or any section and the consequence of deducting tax under section 194R would not apply. Moving on to GST, let us see what would be the nature of this supply. So since washing machine and iron box are not naturally bundled, it is not necessary or it is not an industry-wide practice that every time a washing machine is sold, an iron box has to be given along with it. So that being the case, this would not qualify as composite supply. And let us assume for a moment that there is only a single price which is charged, that is while supplying washing machine, there is only one price charged for both washing machine and the iron box. In that case, this would qualify as a mixed supply under GST. As regards the eligibility of ITC, so long as we are able to prove that this is a mixed supply, that is the price of iron box is also inbuilt in the price of washing machine, the question of giving away gift or disposing it off as free sample does not arise. So the reversal under 17(5)(h) would not apply in this particular case. Moving on to the next case study, let us take a scenario where A Limited is supplying bicycles to B Limited. In order to promote sales, here A Limited directs B Limited, or he authorizes him to conduct scheme or lucky draw contest whereby select customers would receive certain gifts such as watch, hair dryer, etc. So these are also given along with the cycles to B Limited. Just the fact that it is not a case where for each cycle a gift is given. And again, these gifts are supplied by A Limited to B Limited on free of charge basis. So in this case, what would be the implication under Income Tax Act? Whether this giving away gifts of watch or hair dryer free of charge, will this qualify as benefit or perquisite? And let us also see the corresponding GST implications. So in this case again, if you go by the clarification given by the circular of common understanding, the watch or hair dryer which is given to the dealer, that is B Limited, would qualify as benefit or perquisite, and there would be a necessity to deduct tax under section 194R. The logic which was given earlier saying that he is obligated will not apply here, because there is always an uncertainty to the effect that it may so happen that none of the customers may win the contest, so these goods may be retained by B Limited himself. So that being the case, in this case, this will qualify as a benefit. Having concluded that this qualifies as a benefit, under GST, if you see, because these are goods which are otherwise given off as gift or free sample, automatically the reversal under 17(5)(h) will kick in, and because A Limited has given this, these goods as gift of free sample, ITC in the hands of A Limited will not be eligible. Next case study is with respect to reimbursement, which I was talking about earlier while discussing the clarifications of the circular. So here, Mr. P provides professional services to Mr. R. During the course of rendering service, P incurs certain expenditure which is reimbursed by R. So what would be the tax applicable under section 194R, and what are the corresponding GST implications? So here again, if you see, in case it is clear that the liability to incur such expenditure is only that of Mr. P, and Mr. R is only reimbursing that expenditure which is required to be incurred by P, in such case it would qualify as a benefit for the purpose of income tax, and TDS under 194R would apply. However, if it is proved that the person who is liable to bear these expenses is only Mr. R, and Mr. P has only acted as a pure agent, in such a case, this will not qualify as benefit or perquisite. So for pure agent, you may refer to Rule 33 of CGST rules, which states or stipulates certain conditions on satisfaction of which Mr. P would qualify as pure agent of Mr. R. So to name a few, it says that Mr. P should not use the services or goods for his own benefit, or it has to be clear with the agreement with the third party that Mr. P is authorized by Mr. R to receive such service or goods. And more so, the value of such, the reimbursement has to be explicitly given in the invoice, which is issued by Mr. P to Mr. R. So long, there are certain conditions. If those conditions are satisfied, and if he qualifies as pure agent, then the value of this reimbursement would not be includable in the value of supply under GST. The next case study is with respect to dealer conference. So M Limited is organizing a business conference for its dealers in a star hotel, and all expenses are borne by M Limited. So this conference is basically attended by the employees of the dealers. So in such a scenario where it is purely a business conference, whether M Limited is required to deduct tax under section 194R, or rather will this qualify as benefit or perquisite in the hands of the dealer? So here the circular has specifically clarified, stating that so long as you can prove that it is only a business conference, or rather it is say a conference or a training program where they are given a demo of how to use the product, so on and so forth, there is no benefit or perquisite as such, and the implications under section 194R would not arise. However, let's take a case where in addition to the conference, there is also a cultural event or some entertainment program which is organized. And it is not just the dealers who are attending the conference, the family members also attend the conference along with the dealers. In such a case, will this qualify as benefit or perquisite for the purpose of section 194R? So here again, the circular has clarified that to the extent of the expense which is incurred towards the cultural program, or to the extent the expense is attributable towards the family members of the employees, it will qualify as benefit or perquisite. And as a consequence, there would be a necessity to deduct tax under section 194R. However, in a case where it is difficult to apportion or find out the value or arrive at the value of benefit or perquisite, a relaxation has been given stating that so long as they don't claim this as an expense in their books of accounts, they need not deduct this or deduct tax at source. I mean, you neither show it as income nor claim an expense. So you are on the same page. That is the relaxation which has been given by the circular. As regards GST, one thing which I wanted to highlight is, if you see section 17(5)(h), it only talks about goods which are given off as gift or free samples. It does not include within its ambit services which are given free. So in this case, because this qualifies as a service, where it is treated as a benefit under Income Tax Act, the necessity to reverse input tax credit may not arise because there are no goods per se which are given off as gift or free samples. The next case study, or the last case study for today's session, is this. So let us take a scenario where A Limited announces a target-based incentive, say for every 1,000 units of a particular product which is sold, A Limited promises to give a gold coin. And this gold coin is given to the dealer without any additional payment. So in this case, can we say that this gold coin will qualify as benefit? And hence, the question of deducting tax under section 194R will apply. Also, what would be the treatment under GST? So here, the point which I wanted to highlight was, under GST, if you see, if contractually you are able to establish that for every 100 units or of this particular product which is being sold, a gold coin would necessarily be given, and the price of the gold coin is factored in the price of these 1,000 units, then it would definitely qualify as a mixed supply, because ultimately there are two supplies for a single price. And applying the logic of mixed supply, the tax on the higher or the higher rate of tax would apply to this particular scenario. However, in income tax, there is no such thing as if the price of the gold coin is factored in the price of these 1,000 units, then this will not qualify as benefit. There is no such contract-based, I mean, that is not the practice, or that is not how it is viewed under income tax. So there is a possibility, or like that it is likely that this gold coin may be treated as a benefit or a perquisite, and consequently the liability or the necessity to deduct tax under section 194R may kick in. So the point which has to be noted here is that while the gold coin qualifies as a benefit under Income Tax Act, so once you say it is a benefit, then general understanding is benefit is given free of cost. That being the case, the same logic, that is the deeming fiction, has to be taken to its logical end, logical conclusion. So applying the same logic here, under GST, the question of treating it as mixed supply should not arise. Because when you treat it as mixed supply, you say the price is factored in the price of 1,000 products. So there seems to be an anomaly, or there seems to be a difference in views in Income Tax Act and the GST Act. So if a position is taken for Income Tax Act to say that this qualifies as a benefit under Income Tax Act, then under GST, the possible consequence could be that ITC has to be reversed in under section 17(5)(h), and it would be difficult to take a view to say that this would qualify as mixed supply under GST. With this, I come to the end of my presentation today. I thank you all for attending the session. In case there are any questions, maybe I can.
Yes, ma'am. We have questions in the Q&A panel.
Yes. I'll just stop sharing my screen.
Yes. So we'll take up the questions in Q&A panel. Then there are one question in chat box.
Yes, yes. So the first question is from Mr. Vishwanathan. He says, discount offered to customer based on yearly target achieved. Will it amount to perquisite for 194R? The discount will be offered as credit note and adjusted against future invoice. I think I this is similar to the example of gold coin which is given. So in my view, if we take a stand that this qualifies as benefit for the Income Tax Act, and I mean, if it is difficult to prove that the price is not included in the price of the products which are sold, then as a natural corollary, it would qualify as benefit. Only thing which I want to highlight here is under GST, in such a case, treating this as a mixed supply may be a difficulty. So that is something which has to be looked into. The next question is from Pavitra. Freebies to doctors banned by law, and Finance Act 2022 also denied deduction under Section 37 of the Act, despite not claiming expenditure and such practice to be. Is it necessary to deduct tax under Section 194R? Of course, I agree that it is prohibited or there is no deduction permissible under Section 37. However, if you see in words of Section 194R, it neither talks about the taxability of a particular benefit or perquisite, nor does it specifically say that if it is not allowed as deduction, there is no question of treating it as income. So that being a case, and going by the circular which has clarified that in case of free, because this example which I have taken is from the circular itself. So in such a scenario, if free samples are given to doctors and if it crosses the threshold, then there seems to be a requirement to deduct tax under Section 194R. The next question is from Mr. Bibin Thomas. Is food provided to staff working in the canteen at free of cost is a benefit? So I'm assuming this question is under GST or I mean under GST, if there is no specific recovery which is made from the employees for the food which is provided, then we can all try to cover it or fit it into Schedule 3, which says any supply made by an employer to an employee in the course of his employment will not qualify as supply. Hence, in such a case, the liability tax will not arise. Of course, in income tax, if you see, there is no question of applicability of Section 194R because 194R only talks about benefit or perquisite in the hands of a resident who is carrying on business or profession. The next question again is from Mr. Bibin. Is the rent-free accommodation provided to staff included as perquisite under salary or separately treated as benefit under 194R? Here again, as I highlighted, the benefit or perquisite which we are talking about here is only those benefits or perquisites which are taxable under the head profits or gains from business or profession. So if it is an employee, then that would not be covered under the purview of Section 194R. Next question is from Mr. Rohit Jain. Is rupees 20,000 limit to be calculated including GST? I think this was also answered. So GST value need not be included for the purpose of deducting tax under Section 194R. Next question is from Mr. Akshay. It says many situations discounts are termed as incentives, probably due to accounting under income rather than as reduction of expense, where there is no active supply. Under GST, raising a credit note can be performed with or without GST. Mixed supply concept may not apply in all instances. Circular 105 under GST was rescinded. Maybe Mr. Akshay, if we can get in touch offline, I'm not fairly clear of what exactly the question is. Maybe we can discuss offline on your query. The next question from Mr. Akshay is, can bad debts waived off be considered as benefit or perquisite? So this is what I was discussing. So bad debts as such, when they are written off in the books of accounts of the person who is writing off, at that point in time, because it is a unilateral act, that is, there is no consensus, that is the debtor himself doesn't agree that he is not going to pay, it does not qualify as a benefit. However, subsequently, if it is recovered, then Section 41 specifically says that this will have to be treated as benefit or perquisite. And that is what I was also highlighting, because 194R does not specifically restrict itself to section 28. So the question of deducting tax under 194R would arise even if it qualifies as an income under section 41. I think I've answered almost all the questions. I think there's one more question which says, kindly explain whether discount given to dealers is covered under section 194R. So discount here again, if you are referring to sales discount or cash discount, the circular does take note of such discounts and it does confirm that those qualify as benefit or perquisite for the purpose of 194R. However, to remove difficulty, a relaxation has been given saying that 194R will not apply, or rather tax under section 194R need not be deducted in such cases by the seller. However, like I told, it is noteworthy that while computing the threshold of 20,000, the value of such discount should still be taken into consideration. And if the threshold crosses 20,000, you may have to deduct TDS on those benefits which are otherwise not sales discount or cash discount, or the discounts for which the relaxation has been given. There's one more question which says, is TDS required to be deducted under section 195 for perquisite to non-resident? Sir, section 194R applies only in the case of a resident. So if it is a non-resident, section 194R will not apply. I think I've answered all the questions in the chat box.
Q&A panel. Ma'am, the question, Vishnu sir has it answered. Company has sales employees.
Which one, sir?
6 o'clock. 6 actually. In Q&A panel.
1 second. It says a company has sales employees traveling for marketing. In order to make things simple, the company, instead of asking employees to submit travel expenses reports with bills, resorts to giving them daily allowance to cover the travel, accommodation, and food. Will that amount as perks in the hands of employees? Sir, like I said, section 194R will apply only in a scenario where the recipient is a resident and he is carrying on a business or profession. That is, income has to be taxable under section 28, that is under the head profits or gains from business or profession. In all other cases, TDS under section 194R will not apply.
Chat box on 552 Venkatesh. In case of a company, can the amount taxed as a perquisite be claimed as an expenditure since the same will be used by its employees?
Sorry, sir, which one are you referring to, sir?
Chat box. It's a different panel.
Just a second.
Around 552.
So I'm just looking at one question which says, in case of a company, can the amount taxed as perquisite?
Yeah, that one.
Is that the one you're referring to, sir?
Yes, ma'am.
Okay. In case of a company, can the amount taxed as perquisite be claimed as expenditure since the same will be used by its employee? So for this question, let me take a scenario where if the benefit of perquisite, say like in the case of the free samples given to a hospital. So in such a case, if the doctors are employees, yes, the after deducting tax under section 194R and subsequently when it is passed on to the doctors, the hospital can claim this as an expenditure. But one thing which has to be noted here is that since most of, like, let us take a case of say these trips or dealer conferences, it may so happen that the manufacturer would directly bear all the expenses for the employees. So there is no question of actually any expense in the hands of the dealers themselves, because the manufacturer who is providing the benefit is incurring such expense. Because of section 194R, there is a necessity to deduct tax in the hands of the dealer. So the manufacturer, like I was discussing, say the example of the cultural night or an entertainment which is happening, in that case, since section 194R applies, there is a requirement in the hands of the dealer to show this as income under chapter or section 28. However, since there is no expense as such which is incurred by the dealer, the question of claiming expenditure under section or under any relevant section, say for his business, is not there. So this again is something which has to be tested. Maybe we can adopt the logic where the circular says if the value is cannot be arrived, you neither claim expense nor deduct tax. Maybe applying that logic, we can say, because there is no scope for claiming expenditure, this should not be subject to tax.
You can see some questions at the last 6.5 onwards.
So it says when the clarification excludes cash discount, why the threshold is to be considered. So like I was stating, the clarification only says to remove difficulty in the hands of the seller need not deduct tax under 194R. While stating so, it has specifically mentioned that nonetheless the sales discount or cash discount or benefit or rebate would still qualify as benefit. So that being the case, when section talks about value of benefit of aggregate value of benefit of perquisite, it is imperative or it is necessary that this value should still be includable. Say take a case for the clarification which is even April, May, June benefit has to be included. See, when the section itself is applicable only from July, that doesn't mean these are not benefits which are given. So that being the case, it is still a benefit which is given. Just the fact that there is a relaxation from deducting tax on such benefits. I think I've covered almost.
So the other questions was it clarified on the
Maybe
chat box, everything is done, right?
Yes, sir.
So someone who want to interact with ma'am, they can raise their hand, so they'll be allowed to unmute themselves and post questions if any. We'll wait for 1 or 2 minutes and then wind up the session.
Sure, sir, sure. Maybe I can share my email ID in the chat box. So if there are any questions,
you can post email ID, and also some are requesting for the presentation that has been.
Sure, sir. I think I've already circulated.
Yeah, it's with us, and so on your consent, we'll share it as a PDF file to the participants.
Sure,
they
sure,
can
sir.
drop mail to sirccp@icu.in.
Sure, sir.
We'll post. Just post the email ID in chat box to everyone. So they can drop mail if they want presentation of the session. And request everyone to take up the assessment post completion of the session after 7 o'clock. We have opened till 26th of November. So they need to complete their assessment in order to claim the CP credit. Kindly attend the assessment within these 4 days to claim the CP credit. Then under the same login, you can see the assessment will go live from 7 o'clock. It seems no more questions, and if at all any question that comes to our CP mail ID, or else you can respond it.
Sure, sure, sir. I can
Thank you
take.
so much for your time spent here, ma'am, on knowledge dissemination for SIRC request,
Thank
and we look forward to have you in future for physical sessions in SIRC also. On behalf
Thank
of
you,
the
sir.
chairman, secretary, in their absence, we thank you so much for your time spent.
Thank you, sir. Thank you, sir. It was great interacting with you.
Thank you, ma'am, and we'll wind up the session.
Yes.